Twitter stars are now hearts. The company changed its star or favorite icon, which allowed users to favorite tweets, to a heart icon, which allows users to like tweets. Sounds rather familiar to something Chris Sacca mentioned in our interview on Studio 1.0. Take a listen.
They need to do a better job of making it the kind of place where even if you don't do a lot of work, you're going to find the tweets you want. You can follow the tweets related to the game or the debate and the election, the protest. It's time for the heart. Everyone knows what a heart is.
You want a heart instead of a star?
I want a heart. I mean, you use Periscope. The endless stream of hearts is an amazing feature.
The hearts do make you feel good.
It makes you feel really good. It makes you feel acknowledged, heard, valued. It's great. But favorite, that word is like, is this really one of my favorite posts? And so for most people, they don't do it.
Well, now what Sacca has suggested is official. Twitter is doing it. I recently spoke with Spark Capital's Bijan Sabet, an early investor in Twitter and longtime former board member. He's also an investor in Tumblr and Foursquare, about the state of Twitter and whether he's a heart or a star guy. Take a listen.
Twitter users are passionate. I mean, they really care. I love it, no pun intended. I think it's great.
You love the heart.
I love the heart.
Why?
I think it's great. I mean, I've been seeing it. They've been testing it. Clearly, they've gotten feedback that it's working. They like the test. It was available to a limited number of users up until now. But I think it just makes sense. It's like the favorite thing, like Google is favorite in Gmail, and it's kind of, is it for you? Is it social? The heart is very obvious. It's like I heart something, and you should know I love it. And that's being rolled out, and it's a lot of fun. You could see hearts in your timeline. It's great.
So you'd tell Jack to stick with it.
I think Jack's doing a great job.
Now, the question is Twitter making big enough innovations to the product? I mean, obviously there's an uproar over a heart versus a star right now, but we're not talking about anything major, really. Do you think Twitter is really doing and making the big innovations that need to be made?
Yeah, I mean, look, this is a refinement, this heart thing. I mean, clearly the big change was Moments, Twitter Moments, that was rolled out in the last 2 weeks. That was huge, and it just keeps getting better and better. I mean, I'm very biased. I'm a shareholder. We were early investors, but, that was a big one, and it just keeps getting better. I mean, the first thing I do in the morning is I check Twitter Moments, and I think that's the really big move the company's making, and I'm inspired. I think it's great.
So what do you think Twitter's main challenges are going forward, and Jack specifically?
Well, look, there's a lot of scrutiny on the company, a lot of attention. I guess that's an understatement. But they have amazing things going on. They have great people. They have 300 million users around the world. The brand is exceptional. Jack's back. I mean, there's a lot of great things happening, but they need to show that they can grow again. The community can get bigger. They need to work with developers, and then they have to put some big numbers on the board. But like, I'm completely a believer.
Now, you were on the board for many years, and so the story goes. You were one of the people that told Jack to move on, essentially. And now he's back. So, I mean, what do you think about that? That he's back in the role of CEO when, a few years ago, you guys didn't think he could do the job.
Yeah, in 2008, the three of us, Evan Williams, myself, and Fred Wilson, thought that it was time to make a change and have Ev run the company. And that was, many moons ago. And look, I think Dick Costolo did an amazing job with Twitter. I mean, he joined and took the company from 300 people, took it public, built the business model. All those senior executives in the company today, Dick hired Kevin Weil, Adam Bain, Anthony Noto, Katie Stanton. So it's a great team in there, and I think between Jack's vision and leadership as the founder and that team, that's why I'm so excited about it. You see key people coming back to the company like Jessica Varela. So I think this stuff is really great. Jack today, I think, is much more mature and experienced than Jack in 2008, and he still has all the passion and vision he had, plus all the maturity of an experienced CEO. I think it's a wonderful combo.
Do you ever think, what if you hadn't kicked him out? What if he'd remained CEO?
Yeah, I mean, sometimes I'm just human. Of course I do. But look, Ev was the other co-founder. Ev owned 3 times as much as Jack did, as the biggest shareholder in the company. Ev owned much more equity than I did and Fred combined. And Ev really wanted to run the company. We believed that was the right thing to do. And so it's hard to look back, and given that the company, in my mind, is a success. It's a $20 billion company today. So I think about it only because, I'm a human, but it's hard to say that we really did the wrong thing.
You obviously know the company better than, a lot of people out there. What do you think of, I mean, you know that this is a tough job.
Right.
Do you think he can do both jobs? Do you think he can also be
Yeah, it's really hard. I mean, it's rare to have somebody do it. It's, there are people that do it, Elon Musk, et cetera, but it's very rare.
But he's going to be the first person running two public companies?
It's clearly rare. I think the key thing here is that the senior team at Twitter has been there for a while, and they work well together, they trust each other, they respect Jack clearly, and Adam Bain was promoted to COO, and I think that's a big, big deal. I think if that didn't happen, or if the team wasn't as intact, then it would make Jack's life a lot harder. But you have all these things happening, and so I think it's an immense challenge, but given all those things I mentioned, I think it's doable.
And given that you are making investments across the spectrum, you know what's going out there in terms of social media and social networking. How do you see the future of Twitter with respect to Facebook and Snapchat and Instagram and WhatsApp?
Right. Well, look, of all of these things, I think Twitter is still unique. I really do. It's the only place to have public, real-time conversations.
But is Twitter going to convince my mom to join?
I hope she does. I hope your mom uses Twitter Moments every day. I hope she follows your tweets. Your tweets are great.
I keep telling her she needs to follow my tweets.
I follow your tweets. I think they're great, and she should do it too.
But it's complicated for
Does she use
some
Facebook?
People. Yes, she's a huge
She likes Facebook?
user, yeah.
Well, I think she should try Twitter again. I think it's gotten better, and I think that's the challenge. I think, you see a TV ad that was rolled out over the World Series to show people these new products that Twitter's rolling out. I think it's not going to be overnight. I think it's a tall order, but I think they can do it.
Now, you guys now have, Spark has 3 offices, San Francisco, New York, Boston. What are the main trends, areas that are catching your eye right now in this environment?
We're really excited about virtual reality. We were the first investors in Oculus. Obviously Facebook acquired the company, but we still are very bullish on VR. We're looking in this area heavily.
Like what parts? Games companies,
next generation film and video.
So content.
Sports, broadcasting. I think it's going to be a whole new world. I'm really excited about it. We're also looking at robotics very heavily, especially in this area, in the San Francisco Bay Area. Like, we just invested in a company called Cruise, which is working on a self-driving car technology. It's extraordinary. We think it's the best out there. We're looking at other companies now around flying cameras, robots that deliver things to your door. I mean, we're really excited about what the future holds in this area.
Are we in a bubble? What's your take on the environment?
Yeah, I mean, so here's my take. Clearly, there's a lot of exuberance, for sure. But here's my excitement about where we're at right now. So right now we have, 150 unicorn companies. It's a crazy word, but just bear with me. Maybe next year we have 200. Maybe the year after that we have 300. And let's say we're going to have a big correction and most of these companies don't work out. In one way or the other. But imagine if 10 or 20% work, and suddenly we have 20, 30, 40 unicorns, excuse the label, that we've never had before, that are real, durable, amazing companies. Like, isn't that amazing?
Do you think that's likely? Do you think 10, 20% is realistic or optimistic?
I think it's realistic. Certainly 10% I think is realistic. 20% maybe wishful thinking. But even at 10%, that's extraordinary. Like, no previous tech cycle has produced that many extraordinary companies in that short of a period of time. And I think these companies are building, real technology, real scalable business models. Not all of them, but a meaningful subset, and to me, that's the exciting part.
So, how protected are late-stage investments in this environment?
Well, look, if it's true that most of them have a hard time, then late stage is going to have trouble, and late stage needs to be much more selective in picking them. But I'm just talking about as a whole, like what's good for our industry, and if you really have dozens of companies that make it through and build durable companies, that's excellent. But clearly, just like most early VCs aren't producing the returns they need, same thing will be true in late stage.
What do you think about some of the ratchets and the liquidation preferences that are being built into some of these deals, raising valuations that may be unsustainable?
Yeah, I think those are unfortunate, frankly, because if you have to do all these financial instruments to protect the valuation, it's not authentic. It's not good for shareholders. It's not good for employees that may or may not know about all these different things and bells and whistles. And I don't love that. I think that level of complexity is not, the right thing for management and boards to be doing.
So how do you see this playing out? On one hand, you have Mark Andreessen, who's, very, very optimistic about the future. On the other hand, you have Bill Gurley who's saying there's going to be pain. There could be catastrophic events.
Yeah, there will be pain. I'm more in the pain camp, but I don't say that with like a heavy, gloom and doom thing, because I still believe the number of extraordinary companies is still the amazing thing that we should be celebrating.
So if there's pain, how does that play out? Like, you obviously lived through the last bubble.
Right.
I mean, so everyone says it's not the same, but, on the other hand, we're seeing a completely different situation that we've ever seen before, where you're seeing potentially fair valuations on the public market side and very lofty valuations on the private market side. Right.
I think the new part here that really needs to be called out is that in the last bubble, the one that we all saw in the late 90s, those companies are going public with zero revenue, not a little revenue, like zero revenue. Like when Netscape went public, it had nothing revenue-wise, like great technology and users. Yahoo went public with very little revenue. I mean, these companies were not like robust business models that were scaling. They were promising. Now we have billions of people with internet connections and mobile technology, and you have business models that are big and scaling. Twitter, for all the criticisms, is going to do a few $1 billion in revenue. Like that's a real company. So that's why I feel like it genuinely is different this time. But Bill and others are right that there will be a correction, and it won't be fun.
So when there is pain, like what does that involve? What do you see? How does that play out?
There'll be a lot of people that raised a lot of money. There'll be many companies that raised a lot of money that will not be able to deliver on those expectations. So you'll have companies that will downsize. You'll have some companies that will be sold at a loss. You'll have some companies that will go under. But that's the full sentence here, is that we're going to still see extraordinary companies come out of all this.